Hello everyone, and welcome to this video on tips for managing your money in a recession or economic downturn. I'm Naim, a financial expert with years of experience helping people navigate these challenging times. In this video, I'm going to share some tips and strategies to help you manage your money wisely and emerge from this economic downturn stronger than ever. First and foremost, it's important to stay calm and avoid making rash decisions. It's easy to panic when the economy is in a downturn, but knee-jerk reactions like selling off investments or making drastic cuts to your budget can actually do more harm than good. Instead, take a step back and assess your situation objectively. One of the most important things you can do in a recession is to focus on your cash flow. Make sure you have a solid understanding of your income and expenses, and identify areas where you can cut back if necessary. This might mean reducing discretionary spending, like eating out or entertainment, or finding ways to save on essential expenses like groceries and utilities. Another key strategy is to prioritize your debts. In a recession, it's more important than ever to stay on top of your bills and avoid falling behind on payments. If you're carrying high-interest debt, like credit card balances, consider consolidating or refinancing to reduce your interest rates and make your payments more manageable. When it comes to investments, it's important to stay the course and avoid making hasty decisions based on short-term market fluctuations. Instead, focus on long-term goals and a diversified investment strategy that can weather the ups and downs of the market. Consider working with a financial advisor to develop a plan that's tailored to your specific needs and risk tolerance. As we navigate through an economic downturn or recession, managing our finances effectively becomes more important than ever. In this expanded guide, we'll explore additional strategies and tips to help you protect your finances and make smart decisions during uncertain times. 1. Create a budget and track your expenses. The first step to managing your money during an economic downturn is to have a clear understanding of your income and expenses. Create a budget that accounts for all of your income sources and categorizes your expenses, so you can see exactly where your money is going each month. Then, track your expenses diligently to ensure you stay within your budget and identify areas where you can cut back if necessary. 1. Build an emergency fund. In times of economic uncertainty, it's crucial to have an emergency fund that can cover unexpected expenses or help bridge the gap if you experience a job loss. Aim to save at least 3 to 6 months' worth of living expenses in an emergency fund, and keep it in a high-yield savings account that's easily accessible. 1. Prioritize your debts. During an economic downturn, it's important to prioritize your debts and make sure you're not falling behind on payments. Start by paying off high-interest debt, like credit card balances or personal loans, as quickly as possible. Then, focus on making the minimum payments on lower-interest debt, like student loans or a mortgage. 1. Look for ways to increase your income. In a recession or economic downturn, it may be necessary to find additional sources of income to help make ends meet. Look for opportunities to earn extra cash, like taking on a side gig or freelancing. You could also consider selling unused items or downsizing to a smaller home to reduce your living expenses. 1. Review your investment portfolio. During a recession, it's important to review your investment portfolio and make any necessary adjustments. Consider reallocating your investments to safer assets, like bonds or cash, to protect against market volatility. However, it's important to remember that long-term investing is still the best strategy, and selling off investments during a downturn can lead to missed opportunities for growth when the market rebounds. One. Reassess your insurance coverage. In an economic downturn, it's crucial to have adequate insurance coverage to protect your finances from unexpected events like a natural disaster, illness, or job loss. Review your insurance policies, including health, life, and home insurance, to ensure you have adequate coverage and make any necessary adjustments. 1. Focus on essential spending. During an economic downturn, it's important to prioritize essential spending and cut back on non-essential expenses. Focus on spending money on necessities like food, housing, and utilities, and look for ways to reduce your spending on discretionary items like entertainment, dining out, or travel. 1. Stay informed. Staying informed about the economy and financial news is essential during a recession or economic downturn. Keep up to date on market trends, economic indicators, and government policies that may impact your finances. This will help you make informed decisions about your finances and adjust your strategy as necessary. 1. Seek professional advice. If you're struggling to manage your finances during an economic downturn, don't hesitate to seek professional advice. A financial advisor can help you create a customized plan that's tailored to your unique needs and goals. They can also provide guidance on investment strategy, debt management, and insurance coverage to help you navigate through uncertain times. 1. Practice self-care. Managing your finances during an economic downturn can be stressful, so it's important to take care of your mental health and well-being. Practice self-care by engaging in activities that you enjoy, such as exercise, reading, or spending time with loved ones. This will help you reduce stress and anxiety and maintain a positive outlook on your financial situation. 1. Consider alternative sources of financing. If you're struggling to make ends meet during an economic downturn, consider alternative sources of financing to help bridge the gap. This may include options like personal loans, credit cards, or a home equity line of credit. However, it's important to carefully consider the terms and interest rates of these options and avoid taking on too much debt. 1. Plan for the future. While it's important to focus on the present during an economic downturn, it's also crucial to plan for the future. This includes creating a long-term financial plan that accounts for your retirement goals, future expenses, and other financial objectives. By planning ahead, you can ensure that you're on track to meet your goals and weather any future economic challenges. 1. Explore alternative income streams. In addition to finding ways to increase your income, consider exploring alternative income streams that can provide more stability during an economic downturn. This may include starting a small business, investing in rental properties, or building a passive income stream through investments like real estate or dividend-paying stocks. 1. Stay disciplined. Managing your finances during an economic downturn requires discipline and consistency. Stick to your budget, track your expenses diligently, and avoid making impulsive decisions based on fear or uncertainty. By staying disciplined, you can protect your finances and make smart decisions that will help you navigate through uncertain times. 1. Be prepared for the unexpected. No matter how well you plan, it's impossible to predict every economic challenge that may come your way. That's why it's important to be prepared for the unexpected by maintaining a flexible mindset and having a contingency plan in place. This may include having a backup income source, building a larger emergency fund, or having alternative investment strategies that can provide stability during market volatility. In conclusion, managing your finances during an economic downturn requires a proactive and disciplined approach. By creating a budget, building an emergency fund, prioritizing your debts, and exploring alternative income streams, you can protect your finances and weather any economic challenges that may come your way. Remember to stay informed, seek professional advice when necessary, and practice self-care to maintain your mental health and well-being. Finally, don't forget the importance of emergency savings. In a recession, unexpected expenses can arise, like job loss or medical bills. Having a cushion of savings can help you weather these storms without having to dip into your retirement savings or take on high-interest debt. So those are some tips for managing your money in a recession or economic downturn. Remember to stay calm, focus on cash flow, prioritize debts, invest for the long term, and build up your emergency savings. With these strategies in place, you can weather the storm and emerge from this downturn stronger than ever. Thank you for watching, and if you have any questions or comments, please feel free to leave them below.